where what you were thinking
you
is
still know
wrong.
when it's going up and down.
No, you don't. All
So
you
let's
know
see
is how
you
much you're gonna
bought-
lose.
Yeah, you can still do a few things.
Let's see you bought into that.
Observation tools.
Okay.
No,
Can't
those are.
guaranteed predict the market, but you can use the MACD and the volume and the
No,
average
MACD
pricing.
and all
You
those stuff.
can't.
Those are
Nothing,
bullshit.
none of that works.
Those are bullshit.
You can't predict the market.
Because the
Is that
banks
all
and
that works?
institutions know it. The banks and institutions know about the MACD and all those stuff, man. They essentially you're not using any new information. All the institutions and banks know that everyone is, or the vast majority is trading with that help tools, and they are trying to trade against all the majority of the people.
It's not trying to be new or hidden.
What are you guys
it's
explaining?
just
I just got
information
here.
about
Stock
what
market.
you're looking at.
Oh, yeah, I figured.
So basically, you cannot really know where is it gonna go. It doesn't really matter. This is just about probability. Like there is a high probability the price is
You
gonna
can
go
never
up here.
predict it. Otherwise, everyone would just be making millions of dollars. But there are
Exactly.
tools for
So
more
the only
information for you to make your own predictions.
the only
That's
thing
all,
you
that's all I'm
But then
saying. I'm not
the
saying
ma-
MACD is going to make you money. I just mean you can see more information if you use certain tools.
oh yeah
you
sure
can
sure
make
you
trading bots.
Educated.
well whatever
you can
floats your
put-
boat
Yeah,
basically.
yeah.
Whatever floats your boat doesn't really matter.
Yeah.
But the thing
Yeah,
is
that's
the only
Honestly,
thing
what you should do, look up a few of the sites where you can follow which politicians are investing in certain stocks.
yeah but they are
and
investors, they're not traders.
think
They
about
don't help you.
mimicking.
They don't help you.
Exactly. That's stocks. We're talking about forex trading.
Yeah, even if you
They're
day
talking
trade,
about real-time trading.
yeah, even if you day trade stocks,
Either
it's
way,
the same
you
thing.
can still see what they put into.
Yeah, but they're investing. They don't care
Yeah.
if it's down for 6 months.
It's investing, not trading. There's a huge
Neither
difference
should
between
you,
those.
But neither should you. If they know it's going to go up because they have more knowledge and they invest now.
But they have
even in
future
6
knowledge,
months-
not current knowledge.
Yeah, but we don't
yeah,
care
working on
about
minutes, working on minutes
the
and
long
hours.
run.
Yeah,
We
I
don't care about the long run.
Let me
Yeah.
just continue. Let's just say it goes like this, like all the way up. But we bought it here and we sold it here and we made our day. I made my 4 grand here,
Yeah.
and then it goes all the way up, and this will be 400 grand. I don't give a shit
Yeah.
because my
Because
trade was
he
over
made
right here.
his goal.
Party is over. I don't care where it goes after. It's not none of my business.
But it's
Yeah.
kind of stressful. Day trading is
Hey, do you
stressful.
guys
How do you
forget to
like
eat
cope with the
sometimes?
stress? Like, do you like
No,
detach
it's
the
not-
value of money? Or like, I don't care.
It's
If
not
you know
stressful.
how much
right?
you're gonna if you know how much you're gonna lose, it's not stressful, and that's why you have. That's the
Yeah.
only thing you can control. Like again, if the price goes below this line, my idea doesn't work anymore, and I'm taking the loss. That's it. Move on. Do something else. If the price goes down, this is actually a good example because the price went up. I took my money and then it went right back down. It would stop me out, and this is why you have to take the money when you're supposed to take the money and not wait for some miracle to happen.
Yeah. So my question is, are you partially selling? Let's say you bought it here, right? And it drops down to, let's say, that level, right? Under that. So that level, right? And
I would
you
keep
bought
buying.
more here, right?
Yeah.
You bought this line, right? And it goes, after that, it goes up, right? Let's say, are you partially selling or keeping the whole position?
I keeping the position because this scale in gonna make me like double the money that the original one did. But the problem is
But there's
okay,
double the risk because you
the
you
risk is
went
gonna be
in
the
for
same.
50% here, let's say.
Yeah, but,
But you went with your position 50%,
No.
let's say, and
no,
you,
that's different.
Okay,
That's
yeah.
different. Like I went in here with 50% of my original risk. Let's just say this is 100 grand.
Oh, okay,
one
with your
lot.
risk, all right.
Yeah, It's everything is based about risk. It doesn't make the money doesn't matter. I entered here with 50% risk, and let's just say the 50% is like 100 grand, which is one lot in forex, and then I add 2 more lots here. Why? Because I added 50% here. When I got stopped out, I have half my loss. When I add if I triple my position here by adding 200,000 here, that would mean if this position gets stopped out and this position gets stopped out, I would have the full loss. But this position is double the size. So if the price
Yeah,
went back
right,
up,
right.
I have 3 times the size on originally. So that's gonna be exponentially make more money. And that's why you cannot fuck around.
Yeah.
Because it's going to go up and it's going to go right back down when the London session opens or when the US session comes in and just going to fuck you over. And that's why you have to take the money at the highest probability point and not beg for something that's never going to happen. Or maybe it's going to happen.
Right.
Like then the typical
So you're
hindsight
gonna
trading
basically
comes.
accept the risk and don't be greedy.
Exactly.
Right.
So if I'm gone, I'm not being rude.
Damn,
I'm
you're
just
giving
my
these tips for
headset is
free.
dying. So basically,
that's all right. That's all right.
It's just all about probability, basically, and not about.
Yeah.
Never look at the money. If your trading platform cannot hide the money, just take a piece of tape and put it on the screen so you never see the money. you just buy there. You take a certain risk, and when the probability is there, you take the money. That's it. And if it goes 100,000 points higher at the end of the day because Biden did something stupid, it doesn't matter. The party is over.
Because you took the money.
Yeah.
Yeah.
You just have to take more wins than losses. That's it. It's a game's number. I mean,
Exactly.
You just
It's
have to take more wins.
just
than
about
losses.
probability.
Stock market lore, man. Stock market.
And what I do is basically I supercharge it by using VWAP as my only indication for where the volume is, because this is where the bank's buying. Or when you see the sessions change, it's like we're going from Asia to Europe or from Europe to the US markets, you usually see prices are dropping back. Or when news events happen, I always have a limit order right at the VWAP because the price is going to go down 100 points, 1,000 points, whatever, and it's going to stop right at the VWAP because this is where the banks are scaling in. And then the price is gonna go straight back up, and everybody's gonna bitching like, "Oh, they stopped me out. The broker took my stop." No, the banks just picked up the price, and why you didn't do it? Everybody's, "Oh, the broker took my stop." Why your stop is there, you idiot? If you know they're gonna do it, just capitalize on it and have a limit order there instead of a stop loss because
Is that what big institutions do? Like they kind of force the price to go down to liquidate more people so that they can get more.
They don't.
Yeah,
Actually,
exactly,
they don't.
exactly.
No. Actually, the retail traders do that by having they all have the stop loss below the recent low, and then I just made this random here, but this is actually a good example. Like prices go slowly up, and then it tests the VWAP, and it goes back up, tests the structural high, and then it goes straight down and stops you out. And then it goes up.
Yeah, but the institutions look for a liquidity zone. So let's say here are many stop losses, right? Yours maybe 2 and others 2. So they know that here must be the liquidity zone, right? And they manipulate, they go short with lots of lots, just with one little spike into that liquidity zone. All the stop losses are triggered. It goes right back up and they sell it again.
Yeah,
so,
exactly.
Simplified.
Yeah. But this is actually not really the hedge funds and the algos, they're profiting from that. But the reason why prices are actually go there is because you have sell orders here. Because if you're buying here and you get stopped out here, that means you're selling here. And that's you creating demand for price to actually go there. And the institutions, they know this is just stop losses. And that's why they have limit orders there. And that's why I keep saying to the people that more me about, "Oh, the broker took my stop." Why you just not have a limit order here? If you know they're going to take your stop,
Like
have a buy limit there.
You put an order with a limit position, like to buy it, if it reaches a certain point. What do you mean by limit order?
Yeah, you have a buy limit here. If the price hits there, you are in the market. And if the price never goes there, you're good to go. That's what I do. That's shutting down.